Hello, welcome to this weekend market analysis for the 18th to the 22nd of September 2017. Well, last week wasn't really a very bright week for us because the missile launch by North Korea over Japan went seriously against most of our Japanese yen trades. Okay, well, that's not. We don't really want to look backwards. We want to look ahead. We want to forge ahead. Life goes on. We believe better times are still ahead, and we have the opportunity to make back whatever losing trades we have made in the past. Okay. All right, let's go ahead and analyze the charts very quickly. But first, we are going to look into the Forex Factory economical calendar as usual to see those high impact news events that are scheduled for this upcoming trading week. All right, in the news calendar, as you can see right on my screen, we have quite a number of news announcements scheduled for this upcoming trading week. I mean, high impact news announcement. Monday, we have all day bank holiday for the Japanese yen. All right, this is coming from Japan. That should kill a little of the Japanese yen weakness. All right, maybe we might see some little strength. Anyway. There is bank holiday, so be careful with all Japanese yen crosses because our banks are one of those market movers. Okay. All right, intraday traders has to be careful with all of these high impact news announcements. Intraday traders must bear this in mind. Okay, you want to keep all of these news announcements, taking note of their release days, their release hours. Okay, you need to know keep that on your fingertips, just to be sure you are not hit by those news announcements. Okay. All right. For long-term traders, you want to be careful with monetary policy statements. This is one here from the Australian dollar axis. You must keep that in mind as a long-term trader. This week is also FOMC week. Okay, for the American dollar. So this is another heavyweight, high impact news announcement that should rock the market for this week. So you want to really keep this in mind. We will be trading this live, of course, on Wednesday, the 20th of September. We will be live in the market to see if we can grab any trading opportunity with this high impact news announcement. Okay. All right, the next one is quite tentative from the Japanese yen as well. The monetary policy statements and BOG policy rate, interest rate announcement for the Japanese yen. This is tentative, also followed by the press conference. Anyway, before then, we will know if a date or a time is going to be fixed. Okay. All right, aside from that, nothing else, as we only have all the parliamentary elections coming from New Zealand. Okay, that should affect all New Zealand dollar crosses on a Friday. As a long-term trader, pay attention to this, and this. Okay. All right, that is basically all. So let's quickly, very quickly move into the charts and look at a few pairs and their potential directional biases for this upcoming trading week. All right, first and as usual is the euro against the American dollar. This is the monthly time frame. We had already analyzed this pair before, so let's just draw our monthly trend line. Okay, that line right here. Change that color to pink. Okay, also. Okay, keep it at magenta right here. Okay. This area is also an area that everyone has been watching as resistance. Okay, and I told you that with the type of price behavior we are having, this area might not be able to hold price. Okay, so from my experience, price is still very bullish and should be pushing to the upside. Don't click on your sell button right here because you'd feel that this level should be able to hold price. Okay. At best, like I said before, this is the one that I might like to keep this connection. All right, those connections are right here. This higher swing lows, but trust me again, this level is too weak. It will not be able to hold price as well. Okay, so but let's just keep it there for the sake of profit taking levels. Otherwise, price should be pushing to the upside in the euro against the American dollar. Okay. All right. Nothing else in the monthly time frame. Let's see the weekly time frame. In the weekly time frame, we had drawn these levels before, so let's just keep it here. So that level, the price bounced off. Change that to blue. Okay. Now price is still above that level and not even looking backwards. You can see little pushes again to the upside with a last week candle close right there. Don't be surprised to see another push to the upside in the euro against the American dollar. Let's see the daily time frame. In the daily time frame, we had a trend line, okay, a rising trend line that we were following. But price seems to be hesitating a lot to retest this rising trend line, which is obviously our point of reference, our line of reference that we are waiting for price to bounce off. Okay, but that bounce is not happening. Right now we are anticipating a range right there. Okay, price seems to be swinging up and down within that area. From here on, you should be searching for long opportunities. Let's mark those levels. Just mark this low. It might even be a flat top triangle or something. Let's keep it at that. All right, then mark the high there. Well, we got a fake breakout. Okay, that's the high. This is the rise in a swing low. Okay, so you should be searching for long opportunities from here on. Okay, don't go short with the euro against the American dollar. Let's see the forward time frame. In the forward time frame, we got that little trend to the downside. That trend line has been broken. Let's draw that using the color green. All right, green here. Great. You can see that this trend line has now been broken and the directional bias should remain to the upside. Okay, but for us there is no valid entry here. Well, if you are looking to trade this trend collapse, which is not of high quality, then you are looking to click on your buy button here. Okay, your stop loss somewhere around in here. Hopefully price will be pushing to the upside, but like I said, this is not a high quality setup for us. Okay, so we are going to sit on the sideline. There are other nice American dollar crosses. Also remember, this week is FOMC week. All right, it's FOMC week, so you should expect some crawl, especially among the American dollar crosses. Price might get abnormal in terms of volatility until that news announcement is being released. Okay, all right, so in the 1 hour time frame, there is nothing really here, but we can just mark this swing high. You can keep this swing high there in black. If price is able to break above that swing high, then we have the green light to trade the market flow strategy, since we already have 2 updates here. Okay, so an uptrend is already established, so let's wait for the breakout of this level of resistance. Okay, all right, so that is the trade plan. Let's move on to the next pair. All right, you're now looking into the sterling pounds against the Japanese yen in the monthly time frame. Okay, here we are going to draw our key levels of support and resistance. As you can see, overall price has been in this sideways bias. Okay, it has been in a range. So let's just mark our monthly levels of support and resistance. I mean, those key levels of support and resistance. Okay, all right, let's keep this area here. We can also keep this high. Can also keep that high, which was once support right here, also acted as a resistance. Okay, so price is in the range, right now in the middle of nowhere. Okay, let's move into the weekly time frame. In the weekly time frame, we can see how price has been topping out around this level. This one here, this one. and this one as well, while we kept having higher swing lows. Okay, so it seems we have a flat top triangle. So let's mark that. I'm going to change that to blue. Let me use the standard blue color. Okay, we can also mark the bottom here. All right, what else? The next level of resistance, well, most of you have called for this. Well, it is too insignificant, although a level of resistance, but too insignificant in the weekly time frame. At best, the ones that I will want to keep are this one right here. Okay, that's one. Let's draw that level here. Let's keep that one. Aside from that, which other level? Well, if you try to draw this counter trend line, okay, that counter trend line can also act as resistance. Let's keep it here. All right, so right now this should be the next level of resistance if price keeps pushing to the upside before this one here. Okay, so this is the area you want to be observing as the next level of resistance. So with the sterling pounds against the Japanese yen breaking free this flat top triangle, this one here, okay, that area that has been acting as resistance, we got a solid candle breaching through. What next? We need to wait to see if we can get any continuation formations. For instance, a doji, any small candle right here for this week, this very week. Then by next week, we should be looking for pushes to the upside. Okay. In the other hand, if price comes back down, crashing through again, back into this zone, then we have a fake breakout of that level of resistance, and no trade will be taken. Okay, well, generally let's watch and see the type of price action we are going to get off this level, okay, before we can decide on what to trade. But for now, it is a potential setup for us to look for long opportunities, possibly retesting the next level of resistance right here. All right. Okay, so in the daily time frame, what do we have? You can actually see how these levels of former resistance was broken as of last week to the upside. Solid breakout there. Let's wait and see the type of price action we are going to get above this level of resistance that we are watching. Okay, in the forward time frame, there is really nothing here, but you can keep this trend line. You can draw this one. That's a trend line there. You can change that color to green. Okay, in the 1 hour time frame, what do we have? Well, we have two updates, two candles pushing to the upside here, so we can actually wait for that sideways price action. If we get that sideways Tokyo range, okay, then we should be able to trade the London Open breakout setup with the sterling pounds against the Japanese yen. All right, so it is good to follow in the 1 hour time frame. You can see we have two updates. Okay, so what we need right now is that sideways Tokyo range to trade the London Open breakout strategy. So let's wait and see the type of price action we are going to get as the market is going to open. Okay, all right, so that is it. Let's quickly look into the next pair. We are now looking into the euro against the Swiss franc in the monthly time frame. Okay, it is important that we are always want to look into the longer time frames in order to decide our preferred directional buyers of trading the markets. Okay, in the long term, you might want to draw your trend line by connecting these levels. You will see that that trend line has long been broken. Okay, that trend line has already given way. Price has broken that trend line and sitting far up there. Okay, so let's just draw our key levels of support and resistance in the monthly time frame. We can keep this one here, although we had a little spike to downside, so we can keep that level. We can also keep this as an area. Okay, this is an area. Price respecting that point. Okay, both as support and resistance. So all right, sorry about that break. Okay, so this is a key level of resistance in the monthly time frame. But before then, you can also have an internal level right here. You can see that area, although not really significant, but could act as a problematic zone for this pair by the time price gets to that level. Okay, so let's just keep another one here, but then price still has all of this room to the upside. Okay, all right, I am also seeing harmonic bounces around that zone. Let's try to keep a line there. Let's zoom in this chart so you can see that clearly. I am just seeing that right now. I'm seeing that harmonic bounces of that area. We can keep that in the monthly time frame as well. Okay, look at those bounces. That line has been acting as resistance, and by the time price pushes to that zone, it should find resistance as well. Those are the lines that usually act against traders. Okay, so be careful with that. Let's see the weekly time frame. Even before the weekly time frame, in the monthly time frame here, let's keep another line here. The high of that area, the very high. Let me zoom in the chart again. Okay, I'm talking about this high right here, that swing high there. Okay, that's where we are keeping this order line. So we had a solid breakout, a congestion candle there. There is likely to be a continuation move to the upside. That means in the monthly time frame for the euro against the Swiss franc, the directional bias is to the upside, probably to this area, to this trend line right there. So it is good to keep searching for long opportunities in the euro against the Swiss franc. In the weekly time frame, what do we have here? Well, just a little congestion there. No directional bias, but then we are hoping that price will keep pushing to the upside. Let's see the daily time frame. In the daily time frame, we have a range. Let's mark this obvious swing high here. Okay, that's the high here. Change that to color red. Then we have this level here as support. Okay, within this range we are already having higher swing lows. Okay, higher swing lows and also higher swing highs. Okay, last week we are looking to trade this spin bar, this inverted hammer formation, for a reversal move, this one right there. Okay, but it didn't really perform. Actually, we looked into the chart again, and we saw in the long term, just like we have seen, the directional bias to the upside is to the upside, and trading around this area, it's going to be a difficult task for price to just cruise to the downside at once. Okay, you should expect price to make further pushes from that point to the upside. Please do not go short with the euro against the Swiss franc around this level. Price should be pushing to the upside. In fact, as the market is going to open in the 1 hour time frame, let's see that. In the 1 hour time frame, we had this area acting as support. Is it? Let me just see if I can catch that more clearly. All right, this level here is the key point, the focal level that I am watching. Okay, price found support around that point, support here as well. So I will be waiting. If price is able to come again, retest that level, this is where I will be looking for my long entries in the euro against the Swiss franc as the market is going to open. Okay, I want to be trading within this market range, but also in the long-term directional bias. What will I be looking for here? If I find any reversal candles around this level, I will be clicking on my buy button with my stop loss a few pips below that particular level. Okay. All right, so that is the plan for the euro against the Swiss franc. I am hoping that price will be pushing once more to hit that daily level of resistance, and it might even be beyond that level if you connect all of this higher swing counter trend line here. Let's try to draw that using a standard trend line. All right, that is it. You can see that bounce here, another one here, and another one right here. So any bounce off here should drive price all the way to that particular area. I will be trade. This is an aggressive trade. Okay, it is an aggressive trade, so I will be taking a very small lot size, possibly 0.3, 0.3, or even a 0.02 or 5 or 0.05 lot size. Okay, it's an aggressive trade, so you want to really cut down on your loss in this trade. Okay, all right. I have seen that it is wise to search for other trading opportunities instead of banking our hopes on just one setup, and we are taking about 3% on just that one trade. Okay, I would like to split this into several pieces of trades. All right, enough of that. Let's move into the next chart and conduct our analysis. All right, we are now looking into the euro against the Canadian dollar in the monthly time frame. This is a pair that we have been following since last week. Okay, in the monthly time frame, as you can see here, price has been in a sideways bias for several months. All right, for some years now, price has been in a sideways bias. We are having a higher swing lows. Okay, so we are going to keep that line. Let's draw that level and keep that line right here. Change that color to our magenta color. Okay, for the high we can keep this one here. That's this level right here. Okay, that bounced there. We can also keep this one right here. Okay, that one there. That's that bounce. Although we have that type of a channel like a movement, let me try to draw that. Actually, that is what I will even like to keep. All right, so it's more of a channel. Okay, let me just get that clearly. So you can see how price has been swinging up and down, and the directional bias this time around is still to the upside. All right, the momentum is still to the upside, even though we are seeing a little hesitation around that point. Okay, let's also try to draw that line. That's one there. Let me try to draw something here, although that should belong to the weekly time frame. But within this channel, let's change that color. You can also see that price has already broken out of that move to the downside. Okay, that is the breakout. Price has made a pullback and should be bouncing to the upside. So this trend, this line here that was acting as resistance there, is now acting as what? Support. So this is the best place to look for long opportunity in the euro against the Canadian dollar. Okay. All right, let's move into the weekly time frame. All right, now this is the weekly time frame, and this is the line that we were talking about that should be acting as support. Okay, this line that bounced here, another one, we got the breakout, price found support here, will not push above the previous swing high, also finding support right here. Let's draw this level of support. Anyway, that is coming from the daily time frame, but still looks significant in the weekly time frame. So let's draw them. Let's keep this level in red. Okay, let me zoom in this chart a bit. You can see the bounce as of last week. This is a key level of support there, a significant swing point even in the weekly time frame. So this is a bounce candle that is a pin bar in the weekly time frame. It's suspected that for this week price should be pushing to the upside. Okay, All right, you want to, the directional bias there is clear. We will be looking for long opportunities in the weekly time frame. All right, in the daily time frame, we were actually following this pair with this range. Okay, that range there, and we're talking about this level being a key level of support, and price reacted. Last week we got the railway tracks that we were looking to trade, but that didn't happen. Price came down all the way to this level of support again, and last week Friday we saw the bounce to the upside. With that bounce and that pin bar in the weekly time frame, we expect that price should at least push again to the upside to somewhere in here. Okay, so it is nice to search for long opportunities with the euro against the Canadian dollar in the daily time frame. We'll be looking to go long possibly. Again, this is another aggressive trade that I will be looking to take, placing a buy limit order, okay, a buy stop order above that pin bar with a stop loss right here, hoping that price will push to the upside. All right, so that is it. Let's look into the shorter time frames. The 4 hours time frame, this trend line has already given way. It keeps breaking, so not really a solid one. We drew a channel formation right here. We actually had a channel formation. Let me take out these lines that we were following in the live trading room. This was our channel. Okay, that was the channel that we drew as of last week. Now that channel has given way, and if you zoom in this chart, you will see how we are having a breakout pullback, a continuation pattern. Okay, right there. That means price should be able to keep pushing to the upside in the euro against the Canadian dollar. So let's keep this and wait for the market to open. Hopefully we should see price push back up to that area right here. So looking for a buy opportunity around this low after this push to the downside is quite sensible. All right, it's sensible. This is an area to look for your long opportunities, and if you have valid setups or valid price action that tells you that price is at an area to keep pushing to the upside, why not search for long opportunities, even though you have to cut down on your risk. Okay, all right, so that is what we are following here in the euro against the Canadian dollar, nothing else. All right, let's look into the next step. The American dollar against the Japanese yen, the monthly time frame. We are going to just draw our key levels of support and resistance. Every time you look into the chart, you want to spot the type of price pattern that you are seeing in the chart. Okay, price took off nicely, and from here on we are seeing that sideways price action. Okay, all right, and from the top here you can see how price kept giving a lower swing highs. Let's try to connect that top, connect all of it. All right, I'm going to change my color to the monthly time frame color. Also, you will see how price kept giving us these bounces. All right, as soon as you have seen this leaning line, you should look for another leaning line from below, so we can keep this one, or even from here. Okay, so if this triangle is going to hold true, that means upon this bounce to the upside came down, another bounce to the upside, the directional bias should be to the downside. That means the momentum in this pair for now remains to the downside. It is wise to keep searching for short opportunities. In the weekly time frame, what do we have? Last week we were looking for price to break this key level of support, this area right here, but we got a fake breakout in return. Okay, well, there is no line here to be drawn in the weekly time frame. Let's just move on to the daily time frame. I am aware of this area, this one here, but it is not significant, so we are going to be keeping it in the daily time frame. So in the daily time frame, we have this swing highs. I don't want to zoom out this chart, so let me keep it the way it is. Let's mark that double top right there. Let's mark this double top. Okay, change that to red. All right, there is nothing to mark here. We can also keep this area here. Well, I am really pained by this setup. Let me zoom in this chart. I am really pained by this chart. All right, last week didn't go well for us at all because of that missile launch by North Korea over Japan. It didn't go well with us. We had a fantastic setup, okay, a high quality setup that we were trading, okay, and it didn't go well at all with us. The as soon as that launch was carried out, we saw that massive spike to the upside, triggering all stop losses around that area, okay. Now at the end of the day, price still came to close below that level of resistance. What is the implication of this? The implication of this is that the bulls upon that missile launch was not able to close above this level. They were not able to sustain that spike above this key level of resistance. They still came back to close below. So what are we expecting? Like I said in the live trading room, this is an area, an optimal area to search for short opportunities. So price is likely to keep coming back down, okay. All right, but right now we know the Japanese yen is not a safe currency to trade, but at any rate, you can as well place your sell order right there aggressively with your stop loss somewhere above. Hopefully price is going to come back down to this very particular area. Like I said, it is an optimal area to go short, and from the monthly time frame we have confirmed that the directional bias is to the downside. So why not search for short opportunities around this zone, okay. Anyway, I am not giving up on this one yet. I am still hopeful that price will come back down, okay. Even though you are looking for maybe a form of market confusion around here, just connect that high, those highs right there, then connect these lows, possibly, and expand in a triangle formation. This will also make an optimal area to go short, okay. Go short back down to the lower boundary of this triangle, okay. So this is an optimal area again to look for short opportunities with stop loss somewhere above that area. All right, so that is it for the American dollar against the Japanese yen. You can see that ugly movement as of last week. Price is expected to still come back down. Okay, that is that. In the daily time frame, price is at an optimal area, and it is best to search for short opportunities. What else? Let's look onto the final pair in this review. All right, the final pair here is the Canadian dollar against the Swiss franc in the monthly time frame. Let's try to analyze this pair, okay. In the monthly time frame, we are having this area as support, okay. You can see multiple retest here, so let's mark that level as our key monthly level of support. All right, we're also having lower swing highs. Let's see how strong this trend line was. Let's try to draw that, connecting these highs. Okay, still looks good right here, still okay right here, but right now it was broken around that area, okay. It was broken around this point. Everything was fine with all of these bounces, but around here was when that trend line was broken, and you can see how price pushed to the upside. So the job of that trend line came to an end, okay. All right, so we can remove that. Let's just mark the next significant swing high in the monthly time frame, this one here. So we are going to mark that one. Let's keep it. All right, so in the monthly time frame, price has all of this to push to the upside if the bulls are still capable of pushing price to the upside. Let's see the weekly time frame. All right, in the weekly time frame, we are seeing this key level of resistance, like I did analyze in the live trading room. We talked about this key level of resistance. So let's mark that level. Price actually made a retest of that key level of resistance right there, and we were waiting to see if we can get a pin bar. All right, a pin bar of that level of resistance, but the pin bar didn't happen in the weekly time frame, which is the time frame of reference and where the actual trade setup should come from. But in the daily time frame, we saw an earlier bounce right here. Okay, anyway, there is no pin bar of this level of resistance in the weekly time frame, but then for the better part of this week, price should come down to somewhere around in here. Okay, right here, this area here, around the 0.776 area, around the 0.776 area, somewhere around here, before we can see another push to the upside. That means for all of this, price should move to the downside. Let's see. Let's just mark that level around this area. I'm going to mark that in red. So in the daily time frame, you should be expecting price to keep pushing to the downside in the Canadian dollar against the Swiss franc. Somewhere here is where you want to stop searching for short opportunities and to look for long opportunities. Like I said, most of these are aggressive trades that we should take. And where do you want to take that entry if you are getting in aggressively? Let's mark that level. Let me use the very thin line. Somewhere around here, the sorry about that. Okay, somewhere around the 0.7894 level, if at all price is going to make any push or pull back to that level. That is where aggressive traders will be looking for short entries all the way back to this zone. Okay, right here is where they want to close their profit target, then look for further pushes to the upside. Okay, so the Canadian dollar against the Swiss franc, the bears are not over yet. Price is likely to come down to that zone before pushing to the upside. Where do you want to place your stop loss? A few pips above that pin bar should be your stop loss zone. Okay, remember, this is not a valid setup in line with our core strategies. It is an aggressive entry based on price action. Okay, so any pullback, price should be coming back down to the zone for a possible bounce again to the upside. All right, so that is it. Canadian dollar against the Swiss franc, we should expect a temporary push to the downside. In the forward time frame, there is really nothing. In the 1 hour time frame, also nothing here to trade. Okay, nothing. That is it. All right, thanks for watching this video. We'll be discussing March, really March this week in the live trading room. We'll be looking for various approaches to take trades. Okay, we'll be looking for both aggressive and our core trading valid setups in order to remain active in the market and taking possible trading opportunities all around. Okay, thanks for your patience. We hope this coming trading week will be much more better. If you have any questions or contributions, do not hesitate to post it in the live trading chat room, or in the Telegram group, or even on Facebook or our YouTube channel. Okay, we'll be there to respond to them. I am wishing you a profitable trading week ahead. Cheers and bye bye.